All right, so we've got a market update. Lots of exciting things going on. Let's talk about rates, Jason.
Yeah, that's the big talk of the town right now.
Love it.
Right?
Mm-hmm.
As of last week, we saw rates hit a little bit more than a 3-year low, actually. And everyone got really excited when Mortgage News Daily, in particular, put out their daily rate survey on Friday, and it had a 5 in front of it for the average 30-year fix being quoted.
We love that.
5.99.
Mm-hmm.
I am seeing scenarios in the 5s, depending on down payment, qualification, and all that. Pretty cool stuff on conventional loans. And, this time last year, we were essentially at 7%.
That's a huge dip.
It's a huge dip, even if I think right now it's like just a tick over 6 on average, give or take. So if you're anywhere between, let's call it 5.875, 6.25, you're almost 1% better than last year.
So what's that like affordability wise for people that if the house prices have stayed somewhat stable, how much more can they afford?
Yeah, it's getting close to 100K more, maybe like 75, 80,000 more. Depending on down payment, purchase price, all that stuff, interest rate, of course, but purchasing power is definitely creeping up.
And I think it's important to point out that with the purchasing power going up, that does not necessarily mean that every seller should overprice their home by $100,000, although there are more buyers out there, which is definitely a good sign. So houses that have been sitting for a while because of the holiday slump, they're getting more activity now because buyers feel more comfortable.
Totally. Yeah. I think it's gonna stay this way, assuming no changes in the market or in the rates, let's say, to influence things the opposite direction. Knock on wood. But for prospective buyers, that means there is going to be more competition. Mm-hmm. You may not want to wait around if you've been on the fence, and now all of a sudden you're thinking, hey, now rates are great. Well, I'll be ready in March.
Yeah.
You may want to get going on it a little bit quicker just to make sure that you're ready to go.
Yeah, and I always caution people that this time of year is a really good time to be ready because oftentimes what happens, we saw this, I want to say it was 2021, 2022. I think it was 2022. We had like this period in January, February where it was starting to ramp up. People were starting to look at properties, and then the market blasted off come March, April. And not that we can predict that there will be bidding wars and all of this stuff again, but in certain price points, I think that that's very apparent that could happen. And if you wait, you could be sacrificing your purchasing power because in 3 months you could be having to beat out other offers, and by that point, comparables may have gone up, raising the purchase prices, so it could snowball into being a miss. Nobody wants to miss out.
Totally, yeah. It could be a mini little, boom, if you will. Again, maybe not quite to the same extent, but if it's shifting back to the seller a little bit because there's so many more buyers in the market, you may have to overpay again.
Well, and that brings up a really good point because a lot of sellers have been sort of just waiting it out in their homes. And as they start to see more properties coming up, or they start to see that they have a little bit more just power to buy because rates are lower and they're not looking at trading a 3% rate for a 7% rate, they are going to have more opportunity too.
Totally. Yeah. It's no longer, oh my gosh, my rate's going to more than double now.
Yeah.
If we're getting something in the 5s, it may be a little bit more manageable, especially if, it's somebody that purchased during COVID, let's say, or even prior to, and their home has appreciated so much. They're sitting on a ton of equity that, they're going to have a much larger down payment. So maybe that will counteract what the higher rate is going to do, and they can still afford the new home.
Yeah. I wanted to talk a little bit about, I used to see, probably pre-COVID, around that time, I would say, there would be this mental shift that sellers would have. They would say, if I can make this much money off the sale of my home, that will easily help me transition to the next home. And I felt like for so many of my sellers, it was, if I can net $100,000, that was like the golden number. Now, obviously, we've had the interest rates, we've had other factors like prices going up, all of that. It makes it a little bit harder to stretch 100,000 very far if you want to stay in the same area. But what would you say is kind of like that magic number that you're seeing more people say they need for a down payment? Is it 200K? Is it 300K?
Probably closer to 200. If we were to just look at data, not what people are saying, at least 150, because depending on when you bought, right? Yeah. If it was just before COVID,
Yeah.
there's a lot of properties that have appreciated 50% since then.
Yeah.
Right. So if we just apply that, we're at 150. I would say probably the sweet spot is closer to 200 when you throw inflation in
And
on top of
costs.
it.
Yeah.
And everything is just so much more expensive now. But I don't know. A good example would be, let's say somebody bought a condo for $400,000 or $500,000 and 5% down, and it's gone up $125,000, let's say, just to account for seller closing costs and all that stuff. So they're going to make an extra $100K off of that. That's probably just going to get them a little bit nicer of a condo now, maybe.
Yeah.
At best, right?
If they're trying to
stay in the same same ballpark as far as payment and all that, and even then it's probably a little bit more because of rates. So I would say 200 though is going to open up a lot more possibilities and probably make people more comfortable in that type of a scenario.
Yeah. So anybody that wants to find out if they're in that ballpark of equity and appreciation of 200K plus, we have the means to figure that out for people.
Totally, yeah. And that 200 right there, if you're looking in like $1 million single family home price point, there's your 20% down. I know people get hung up a lot on the mortgage insurance or less than 20% down, but that eliminates that right there. And then they don't only have to look at condos or townhomes or whatnot.
Question for you, just on the mortgage insurance point, because I've heard people. I want to educate people right here. I've had some people come to me and say, once my appraisal value is higher, it can knock it off. I've had other people say, no, it's stuck for the life of the loan. Is there a black and white? Is there a right or wrong on that? Has there been changes? Because there's a lot of noise out there about it.
Yeah, generally you're stuck with it for a period of time.
But till you get to
I can give my own example, actually, because my wife and I bought 5% down during COVID.
Okay. Yeah. You are your scenario.
Yeah.
Perfect.
And by 2022, our home had gone up so much already. I was on the phone with our servicer saying, "Hey, is there a way to get rid of the mortgage insurance? I'm not going to refinance. I have a 3% interest rate." And they said we can do a full appraisal, and go off of that. Mm-hmm. And I had to wait. I think we had to wait at least a year, if I remember correctly. But I was able to get it removed.
Okay.
So early, and I didn't have to refinance to do it or anything like that. The more traditional way, if you buy with a higher rate and your rate drops, you can always just refinance, get the new appraised value, and then have it removed that way as well.
Okay.
This is for conventional loans, by the way. FHA, it stays on there if you stay in the FHA loan. You're not removing your mortgage insurance.
Okay.
Yeah.
All right. Well, then that's some education for everybody there.
Yeah.
I have been talking to so many people that just feel terribly stuck in their home. They feel that they have a really good interest rate. They've got like the lowest mortgage, a mortgage that's lower than you could possibly rent even a 2-bedroom condo for. They feel like appreciation has pushed everything up so much that if they wanted to trade up, they wouldn't be able to afford it. They feel just stuck, and their income hasn't gone up enough to account for that difference in what their mortgage payment would be. So I know everybody's scenario is completely different and needs to be looked at, but are there options?
It's tough when you have a really, really low payment because of the payment shock.
Yeah.
Right? Depending on how much equity they're sitting on, maybe depending on, I don't know, let's say their mortgage is, like, even including everything, it's really cheap. Like $1,500 a month or something. They could maybe pull out some cash for a down payment and put that towards the new property and maybe convert the property to a rental if they're able to rent it for, like, I don't know, $4,000 or $5,000 a month, let's say.
Because I feel like that is something that is very possible in some areas.
Yeah.
Yeah.
Totally. Yeah. I mean, if they've owned the home for a really long time and then their mortgage really is that cheap or it's almost paid off or whatnot, maybe that would help them feel a little bit more comfortable or just help them to qualify.
Yeah.
On the next property. And it's like, oh, now I'm going to be bringing in like a net positive $3,000 a month, let's say, in rent. That's going to help with my new mortgage that's going up by $3,000 or $4,000 a month or whatever it is.
Yeah. So that's one solution. And I think that works really well, especially for people in townhomes or condos. Now, what about the person in the single family house that wants to get to a bigger house, but like they can't bridge that gap? Could another solution be to pull out money to add an ADU or something to that effect, or just, do a basic addition to make their house bigger? It may not get them exactly what they want, but it gets them closer.
Totally.
some
Yeah.
options.
Yeah. I mean, that's a great option too. I know a lot of people are exploring that now.
Yeah.
ADUs rent for a decent chunk every month. I mean,
Couple of
depending
grand
on how
usually.
nice, you could probably get a couple grand easily. And if someone has several $100,000 of equity,
Yeah.
they could pull that out, pay cash for the ADU. Ideally they're positive on the rent, based on the cash that they're pulling out. And it's another great way to bring in some extra income.
Yeah. So
Yeah.
There are different things. I know that a lot of people do feel stuck. I've been talking to you all. I hear you and see you. And I know that it's a challenge if you're frustrated with your home that, you were so excited about, but now it's no longer serving you the way that you want it to. So we're always happy to explore different options and see what can be done to make it better for you, make it happy for you.
Yeah, there's a lot of options out there. You just need to get educated on it. Talk to Holly, talk to, a lender, myself, whoever it is. And just get all the information that you can, get all the facts, and that way you can make an informed decision.
Yeah. Yeah, I think that this year, I mean, obviously, we always start off the year so optimistic. I feel like I can't remember the last time we started a year pessimistic, but all systems are, all signals are pointing toward a favorable year right now. Fabulous news about the interest rates. That's going to help a lot of people. And that's, and also the fact that it's going to give people different options that they haven't had in a few years.
Yeah, absolutely. Yeah. It's pretty exciting to see that we're meaningfully moving in the right direction. We've been teased with these low 6% interest rates a couple times over the last few years.
Yeah.
And it just hasn't held, right? It was maybe for like a month at a time at the most, maybe even less sometimes. And then, there's a jobs report or an inflation report or something that sent rates right back on up to 7%.
Mm-hmm.
And, we got down pretty low in the fall again.
Yeah.
They crept up a little bit, but they only up to like 6.5 around, like October, November. And here we are now down at 6%. And it just seems like it's holding pretty steady. And it's kind of the new normal that's been established. And it'll be exciting to see where it goes from here. And I think it's going to open up a lot of opportunities for all the buyers that have been really concerned about that.
Yeah, I think the biggest takeaway is anybody that is thinking about doing any sort of moving around this year, whether you're dead set on doing it later in the year or not, or you just don't know, it's really great to start those conversations and work on your pre-approvals now. You're not held to a pre-approval. It doesn't mean you have to buy a house, but it just gives you a much better idea of what you can actually look at. And that way you have a better feel for what's happening in the market, because some properties, even ones that look like they've been stale, are now getting a lot of attention. And then also sometimes properties are getting tons of traffic. Other ones are getting less. It's really good to get out there and observe what's happening so that you know how competitive it is or how much of an edge you might have.
Totally. Yeah. Ask as many questions as you can. If you're talking to a lender, let them know what your plans are. Make sure you're talking with someone that's going to, work within what your goals are. And, get all your answers or questions answered. And that way you can be as prepared as possible, when the timing is right for you.
Yeah. All right. Thanks, Jason.
Cool. We'll
give an update pretty soon. I know that we're going to be getting some more news in the next week or so.
For sure. Yeah. It'll be exciting. Thanks, Holly.
Thank you.
Bye.